Strong representation means evaluating both, and you make the best decision for you. When buyers think about financial risk in real estate, they usually focus on purchase price, but the purchase price is only one part of the equation. When financial exposure often shows up in the details, the contract language, the HOA documents, the insurance structure, and the decision made during due diligence. And most of those risks are invisible until they're not. I'm Lee Mendieta with Century 21, the Harrelson Group. As a trusted local expert here in the Grand Strand, my role isn't just to help you secure the property, it's to help you evaluate where your financial exposure actually lives. Let's talk about how representation quietly affects your capital position, both now and years from now. At its core, a real estate transaction or contract is not just a purchase agreement. It's a risk allocation document. It determines who absorbs inspection findings, how appraisal gaps are handled, when deposits become non-refundable, what happens if financing shifts, how contingencies are structured. Where buyers are often surprised is how small language decisions affect leverage. For example, an improperly structured contingency can limit your exit options during due diligence. A rushed timeline can compress your ability to renegotiate, and strong representation doesn't make a contract complicated. It makes it precise, and precision protects capital. In the Grand Strand, many buyers purchase condos or homes in managed communities, and this is where financial exposure can quietly expand. An HOA is not just a monthly fee, it's a financial ecosystem. We tend to look at reserve funding levels, upcoming capital improvements, special assessment history, even litigation status, insurance coverage held by the association. Where friction usually shows up later is when reserves are underfunded. If major systems like roofs, elevators, exterior components aren't adequately reserved for, and those costs just don't simply disappear, they're redistributed, often through special assessments. And those assessments can materially change the total investment. Strong representation means reviewing HOA documentation within a financial lens, not just confirming that rules feel acceptable. Insurance on the coast requires discernment. It's not just about finding the lowest premium. We evaluate wind coverage, flooded exposure, deductible structures, named storm provisions, loss assessment coverage for condos. Where buyers are often surprised is how deductibles behave during storm-related claims. A lower monthly premium paired with a high deductible can significantly increase your financial exposure during a loss. So representation influences whether insurance is treated as a checkbox or a strategic planning tool. The goal here is really clarity around the true carrying cost of ownership before you fully commit, because predictability preserves your margin. So not every inspection finding requires immediate repair. Some findings require financial planning. In the Grand Strand, moisture intrusion, HVAC corrosion, and roof lifespans are especially important. Where exposure typically surfaces later is when deferred maintenance compounds. An aging roof today becomes a full replacement tomorrow. Corrosion today becomes a system failure later. Representation shapes whether these findings are negotiated, credited, or factored into future cash planning. The objective isn't to eliminate every expense, it's to eliminate surprises. Financial exposure isn't just about today, it's about optionality later. Will this property appeal to broad resale market later? Does the HOA restrict financing types? Are rental limitations narrowing your future buyer pool? Is the property warrantable? Where representation matters most is in anticipating how today's decision affects tomorrow's flexibility. And a property that limits financing options or resale appeal may perform well emotionally, but poorly financially. Strong representation means evaluating both, and you make the best decision for you. So financial exposure in real estate rarely announces itself. It lives in structure and in sequencing and interpretation of documents. In these decisions, They're made quietly during due diligence. Representation doesn't eliminate risk. It identifies it early while you still have leverage. If you're considering a purchase in the Grand Strand and want to understand where financial exposure may exist within the properties that you're right now evaluating, I'm happy to walk that through with you. There's no urgency and/or pressure. Just a clear, structured conversation about how protecting your capital and you're preserving your flexibility. I'm Lee Mendieta with Century 21, the Harrelson Group. Let's make sure your next move protects more than just your purchase.